Okay, Tom Wilmot here again with a basic review of a strategy and how we're building and trying to develop a profitable expert advisor and MetaTrader. This, once again, is the Euro USD 15-minute chart. We use a couple more examples here to show you what our thought process is. Let's back up just a little bit here. In this particular case, we pull down, test the chandelier. We come down close here. This may not be a level that's low enough, really, for others. I put this level at 33, but in any event, once we have a bounce, we can see that this was maybe going to be 6-7 pips of risk. The upside potential was 35 pips or so. And as a result of that, I'd like to share one of my basic formulas, and that is that if long-term you can be profitable more than 50% of the time on your entries, which is not very hard to do, then if you are limiting your risk, say, to 10 pips and expecting 3 to 4 times your risk level in a trade, that would be 30 to 40 pips. Long-term above 50% without having to be a genius in mathematics, you can get the idea that your equity curve is going to be up and to the right. So let's take a look. This would potentially be back here a losing trade. We got in. We measure down about 8 pips. Maybe we'd take that because we had such limited exposure here on the upside. Bottom line is the next candle breaches the chandelier. We'd be stopped out at this close. The distance is about 6 pips from where we entered. So let's say we have a $75 loss in this particular case. We have a $350 win in this particular case. Both are within the bounds of good taste with our rules, and as a result, we trade the $350 profit for the $60 or $75 loss, and we would have had a very good day. If we come over to this particular place, once again, we'd want to measure how close we are to our chandelier. We can see that that's going to be 2 or 3 pips here on the euro. We're well oversold. In this particular case, we have a nice bounce, and we move to the upside here, and we have 15 or 16 pips as opposed to 4 or 5, so 3 times 5 is 15, which is a perfectly legitimate way to trade the market on a scalping basis. This is a perfectly appropriate kind of in and out situation so far as I'm concerned. In this particular case at the London Open, we move down, we breach the chandelier, we wait for our pullback. In this particular case, we are well above our threshold levels on the stochastic in terms of being overbought. And the divergence is what I would call it. The divergence suggests that we're in a downtrend because of our chandelier, but we're overbought because of our stochastic. And so that's the place where we'd want to be doing our entry to the short side. And in this particular case, our risk is somewhere in the 5 to 6 pip range. And here we have a 16 pip result. If we wait and don't get out of the trade at 16 pips, we come back, we test this level again. Depending upon how high your courage quotient is, that's good. Then we come down 19, 27, down into the 30 range. So once again, a very nice risk to reward ratio, and that's how you want to measure your trade entries and exits, no matter the strategy or the indicators that you're using. Okay, let's take a look at some of the other areas that we might want to consider adding in. I'm quite a big fan of taking a couple of trades a day and not over trading. So my goal would be once I'd reach my profit target for the day, I might just stop trading. But even if you didn't, moving into the next day, you can see that right here, we were coming up and we're approaching the chandelier. We hadn't really gotten overbought, so that here in this area, we probably would not have taken a trade. We're simply not high enough in our stochastic. Good thing too, because what happens as we continue on, we get into an uptrend. We pull through, we breach the chandelier. As a result, there are no short trades now, only long entry possibilities. But notice here, one of the things is, if we're going to be true to our rules, we don't enter a trade at this level, given this particular EA's rules, simply because although we did a pullback here, we did not pull back and approach the chandelier as closely as we might need to. Even though it's 5 or 6 or 10 pips, we didn't achieve our oversold condition in the stochastic, and so we'd simply leave this alone. It was a nice move to the north. There was a reach down to the chandelier at this point, but once again, we weren't really sold until we got to this level here, and at this point, once the candle closed, the chandelier was breached, so once again, no trade. We come around, we turn around, we come up, now we've reached this level. Once again, nothing happening here. In this particular level, we might have taken a trade, although it's the end of the day and usually quite quiet. That's not necessarily a great time to be entering any position, but that's a separate issue as to whether we want to limit our time frames. Many of the EAs that are successful that I have observed or that have been shared with me wouldn't necessarily enter anything in the U.S. session after, say, 1 o'clock in the afternoon. Things have quieted down. We can see that's the case here, so this isn't very reliable. This is also, it turns out, a Friday afternoon, because here's your Sunday open. Here's the Monday open as well. So I think we can just skip over this area, no matter what the conditions are of our EA. We probably would not enter at this particular moment in time. Just quickly, a couple more situation to describe to you. I've drawn a yellow line here. This was the Monday trading situation. We came up and got close. We got close here. Whether you take this trade is it's a marginal opportunity, because we really aren't that high in terms of our situation. You might well have taken a trade in this position on a Sunday night into Monday morning, but no matter. Let's take a look at why we drew this yellow line. In this particular case, I'll move it for you so you can see, the candle closed and bounced a bit off that chandelier. However, notice that when it did so, the stochastic was not oversold. It was only at a 50% level. So this is not a legitimate trade, and the EA would not have done it. Luckily for us, on the next candle, as we moved into oversold territory, we breached the chandelier and went back down. So once again, the EA is keeping us out of trouble. There's nothing here to worry about, because we're not within striking distance of the if we move our yellow line to this particular level, we are overbought at this point, but we have crushed through the indicator. And even if we had made an entry at this particular moment in time, based upon how close we were to the chandelier, we would be getting out at our 10 pip max level for losses. Once again, the same thing is true here. Now, in this particular case over here, let's test. This is going to be a bad trade for us. We bounce off the chandelier, we have a reversal, we're in oversold territory, then we quickly reverse and we take out the chandelier. So at this particular moment in line, there is another lost trade, but we have a close just 4 pips below the line, so a $40 loss limits our liability. We pull back. We don't really get ourselves into a trade. We have neither the proximity to the chandelier nor the overbought condition. Let's continue on and see what's happening next. Here is about the next best situation, I would say, right here. Look at this particular trade just to give us an idea. We're in a situation where we're quite close. We have actually some consolidation in the market, because we have this flat plateau. We're bouncing here. We've clearly taken out the low of the stochastic moves on the oversold condition. And we're amply rewarded if we were to enter at this point, because we get as many as 73 pips on the upside before there's any real risk at all to us in terms of being reversed out of the position. So that's enough for now. I hope that was helpful in terms of understanding how the EA might be crafted and what its profit potential might be.